In the era of inflation, cash vs. assets. What should I have? Inflation is one of the important factors that greatly affects economic activity. Inflation is a phenomenon in which the prices of goods and services generally rise, which reduces the purchasing power of money. In this economic environment, individuals and businesses need to rethink their asset allocation strategies. Inflation is a phenomenon in which the prices of goods and services continue to rise, which usually means that the purchasing power of money decreases. The causes of inflation include demand-driven inflation, rising costs, and inflation from increased money supply. Demand-driven inflation is a phenomenon in which prices rise as demand for goods and services increases across the economy. Rising costs. Inflation is when the prices of goods and services rise due to an increase in the cost of production. This includes rising raw material prices, rising wages, and so on. When the central bank increases the money supply, the amount of money circulating on the market goes up and the value of the money goes down, which in turn causes inflation. Inflation affects the economy in a variety of ways. When inflation intensifies, the real value of money decreases, reducing the purchasing power of consumers. This can dampen consumption and negatively affect economic growth. In addition, inflation reduces the real value of savings, so it tends to encourage investment rather than saving. Cash is the most liquid asset, and it can be used immediately when needed. In emergencies, cash is extremely valuable. Cash is a safe asset in that its value does not fluctuate. Cash is not affected by the volatility of financial markets, so it can be a stable means of preserving value. Holding cash costs little to no administrative expenses. Cash deposited in a bank account has no or minimal administrative expenses. However, the real purchasing power of cash decreases in the face of inflation. This erodes the value of cash, which can lead to long-term losses. Cash offers little interest, and when you consider inflation, the real rate of return could be negative. By holding cash, you can miss out on other investment opportunities. If you invest in other assets such as stocks and real estate, you will give up the return you can get. Real estate tends to increase in value in the long term. When inflation occurs, property prices can also rise. You can rent a property to earn continuous profits. Real estate is a relatively safe asset, and its value tends not to fluctuate significantly, even during economic instability. However, properties take time to sell, and it is difficult to cash in immediately in an emergency. The property will be subject to maintenance costs, taxes, and maintenance costs. We may lose money in the short term due to volatility in the real estate market. Stocks can provide high returns in the long run. The return on investment increases with the growth of the company. Stocks are assets that can be cashed in relatively easily. If you sell on the stock market, you can cash it out immediately. The stock market has stocks from a variety of companies, so you can reduce risk by diversifying your portfolio. However, the stock market is volatile, and it could be a big loss in the short term. Stock prices fluctuate due to various factors, including economic conditions, corporate performance, and political factors. Successful stock investment requires knowledge and experience, such as corporate analysis and understanding market trends. Precious metals such as gold tend to preserve their value even in the face of inflation. Precious metals can be cashed in relatively easily. Gold is an internationally accepted asset, so it's easy to sell. Precious metals are considered safe assets that maintain stable value even in times of economic instability. However, precious metals do not offer as high returns as stocks or real estate in the long run. There may be additional costs to keep the precious metals safe. Precious metal prices may also fluctuate depending on market conditions, and they may lose money in the short term. In the era of inflation, it may be more advantageous to invest in a variety of assets than to hold cash. Cash has advantages in terms of liquidity and safety, but it has the disadvantage of reducing real purchasing power and lack of profitability due to inflation. On the other hand, assets such as real estate, stocks, and precious metals are likely to maintain or rise in value even in the face of inflation, and can generate a variety of returns. Thus, in the era of inflation, investing in assets rather than cash helps ensure economic stability and profitability. However, it is important to establish an appropriate asset allocation strategy in consideration of the characteristics of each asset, the individual's financial situation, and investment goals. It is desirable to achieve long-term fiscal stability through efficient asset allocation against inflation. Please subscribe, notify, and like. It's a great help for me to produce a video. Thank you.